Hello, my name is Michelle McLaren, and I welcome you to the ABCs of Health Insurance. I'm a licensed health insurance agent in the state of Texas, and I'm also a licensed health insurance counselor. That's not something you're going to find everywhere. I own Just the Facts Insurance Agency, and I'm here to help explain the confusion that is health insurance, especially for individuals. Insurance is evil. Let's turn evil into easy with answers. Today's letter is I. I is for income. In the past, before the Affordable Care Act, income really only related to health insurance in that you needed income to pay for your health insurance. If your income was below the poverty level, you might qualify for Medicaid insurance instead. With the Affordable Care Act, your household income directly impacts how much you pay for your insurance. If your household income is between 100 and 400% of the poverty level, for an individual that's $12,000 to $48,000 roughly, then you might qualify to receive a tax credit to help you pay for your insurance. Most people take this tax credit as an advanced tax credit, and that helps them pay their premiums throughout the year. If your income is less than 250% of the poverty level, roughly $20,000 for an individual, you might also receive cost-sharing deductions. These are reduced deductions and max out-of-pocket amounts on silver-level health plans only through the marketplace. The reductions of these out-of-pocket costs were covered by a tax subsidy from the government, from the Affordable Care Act, to the insurance companies. This is the subsidy that was all in the news last October when Trump chose to end it. By ending this subsidy, the insurance companies still had to offer these cost-sharing plans, so their resolution was to increase the premiums on silver plans. Most of these silver plans are also how the tax credits are calculated. So if you qualified for a tax credit, your tax credit amount probably went up because the silver plan premium was higher, and it really probably cost taxpayers more money in those tax credits than if we just left the subsidy in place in the first place. For those who didn't have a tax credit, they often found that a gold plan was less expensive than a silver plan because the insurers only chose to increase the premiums on the silver plans. Those are the ones that you can get cost sharing on. I can also stand for individual. The details of the Affordable Care Act affect everyone, all types of insurance, health insurance. But the people who are hit the most are those who are purchasing individual health insurance plans. This means that the health insurance is not coming through an employer, which would be a group plan. So it's an individual even if you have a 10-person family. This is only about 16% of the population, not that much. According to the Kaiser Family Foundation, a great resource for health insurance data, about 7% of those people still have individual coverage and 9% have no coverage for a variety of reasons. If you're curious, about 50% of the people are on employer-based plan and about 34% are on public programs like Medicare or Medicaid. So then 7% are on individual plans. We're only up to 81%. So that's a lot of people that have to figure out what their alternatives are. And the insurance companies have decided that, well, if more than 50% of their income's coming from those group plans, why bother with the individual ones? In fact, in Texas, which is where I live and work, Aetna, Humana, United Healthcare, and Cigna have all left the individual market. I guess the income was the important thing for these companies as well. Thank you for taking the time to listen to me, and I hope you found this information helpful. Do you have other health insurance questions? Check out my other videos or leave your questions in the comments. Education is important, and that's why I created Just the Facts Insurance Agency. It's just the facts you need to protect those you love. Peace and health to all.